We want to talk a little bit about what's going on in the cryptocurrencies. Charlie breaking it down. Mike McClone, commodity strategist at Bloomberg Intelligence. He's been on the road. He's back home here in our Interactive Broker studio. Hello there.
Hello, Carol and Tim. You guys are the dream team. Thanks for having me.
Okay, we're not going to argue with that.
Yeah, we'll take it.
Crypto, though, kind of not the dream currencies, it feels like today. They're down, a lot of them. You were at this big event in Miami.
Okay, traders.
What was going on?
Well, I like to describe.
Are you ready to trade Bitcoin?
Stock because this.
Okay, I'm placing an order to buy Bitcoin. I'll tell you the price I'm looking to buy, 32,215. Okay, I'm placing an order to buy Bitcoin at 32,215. It's right here. So if you're looking to trade Bitcoin, here is your chance. You still have time to enter edit position and place order to buy Bitcoin. Okay, guys, I'll speak to you later after this order will be filled. Okay, and stay safe.
Do you think it was more mainstream than peak?
The people I met so I walked by one of my friends. He was standing next to a guy from a major accounting firm, and then I met someone I knew who used to be in ETFs, and another group I met was a trust bank.
So trust bank, ETF, and accounting.
And then a lot of miners. I met with a lot of miners, and some of them were some of the most respectable people I ever met. One of them was a miner. I'll end on this. He got into Bitcoin only because he needed his position was providing power and energy, and he needed to manage that flow. And when he had excess power, he said, okay, I'll just use Bitcoin to offset that, mining Bitcoin to offset that excess power.
So where does it go in your view? We've had the conversations about it being a collectible, right? We've talked about that. So where does it go? Is it that we have multiple cryptocurrencies?
Yeah.
Is it again about blockchain? Like, where do you see it all going?
Well, to me, that's the key thing of the conference. Bitcoin is a collectible, and then there's 10,000 wannabes. There is on CoinMarketCap.com. Actually, 10,333 at the moment. And last year, that was 5,000. So there you go. Yeah. Massive excess of supply, ease of entry, rules of economics does not favor higher prices. But it's the number two that I liked bringing up a lot, Ethereum. You know, that's that lesson from Frederick Douglass. You say, just agitate. So I tried to agitate. And behind the scenes, everybody I mentioned Ethereum, so it was all positive about it. But on the stage, it wasn't a good idea to mention because it was all about Bitcoin. So that's the cool thing about Bitcoin. That it's banking the unbanked. The key quote out of the conference was, 2/3 of the people on the planet don't have bank accounts. 40% of them have cell phones or smartphones, and they can get Bitcoin and cryptos on their phones. And what's happening lately with this, what you saw with this, finding these funds from the colonial act, that's nothing new. And I can dig into that. Like the MC of the conference, he initially got into Bitcoin from buying drugs on Silk Road, which was busted by the feds because they just tracked the transactions.
But this is what got all the attention in 2012, 2013, 2014 when it came to the cryptocurrency.
Yeah.
Mike, you in your report outlining this event, summarizing this event, you asked the question, what problem does Bitcoin solve? Yeah. What was the answer that you found and potentially how it changed at the conference?
That was a question I have answered distinctly I'll answer it first with, I go straight to the British Museum. I think of the Hoxne Hoard. It's one of my favorite things to visit there. It's the largest hoard of precious metals ever found on the planet. It was from the Roman times. You picture yourself, you're a Roman leader. It's collapsing. The locals don't like you. You need to get out and hide your wealth. They never came back to find it. And I figure, okay, he probably did it at moonlit night, and he had to do it himself, because if you have a servant do it, the servant will either find it, come back and tell someone else, or kill. You have to. But the point is, it's that wealth, to be able to transmit, transport, and transact in wealth a certain amount of and store it someplace 24/7, be able to do it on a cell phone or on a phone or in your head. That's never been possible in time. So that's the problem it solves. It's banking the unbanked. So here's the latest I'll leave you with. El Salvador has already said they might adopt it as a currency. Know what's happened in El Salvador in the last 30 years?
Right.
Wars, currency collapsing.
Yeah.
And if you have something that can base against, like Bitcoin is like a gold, not like a dollar, then it can help solve that problem.
10 seconds. So at some point in our life, will we all have some Bitcoin in our portfolio or what have you, or access to it?
I think so. Because if we don't, it's kind of like a digital version of gold, and the world's going digital, and Bitcoin is the first in that space.
Oh my God. Mike, can you just stay for like another 60 minutes? tomorrow. To be continued. Mike McClone, commodity strategist at Bloomberg Intelligence in our Interactive Broker studio.
Let's get a check of the world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim, a new report outlines massive security failures during the January 6th attack on the Capitol. The bipartisan report from 2 Senate committees notes a total failure of leadership by commanders of the Capitol Police. Senator Amy Klobuchar tells CBS This Morning what she sees as the big takeaway.
For me, it was the lack of planning to have one of the officers, and we picked this up in one of the tapes. He actually said, in the middle of all this, people are being shot, glass is breaking. He said, does anyone have a plan?
Federal intelligence officials are also criticized in the report for failing to adequately warn Capitol Police about a potential for violence. The report's recommendations call for better planning, training, and intelligence gathering, but it makes no conclusions about former President Trump's role in the riot. A digital crackdown on criminals around the world has led to more than 500 arrests. The suspects had been using what they thought was a secure messaging app that was secretly being run by law enforcement. The FBI's Anthony Russo says the crackdown sends a pretty clear message.
There is a robust network of international law enforcement agencies that are resolute in combating this global threat.
The worldwide sting operation was led by the FBI, authorities in multiple countries who were able to monitor the messages of drug dealers, smugglers, and money launderers. The UN Security Council has given its unanimous backing to Secretary General Antonio Guterres for a second term, assuring that his election as the next UN chief by the General Assembly. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. We decided to keep him around.
You got your wish. You said, can you just stay? And he stayed.
For 2 minutes. We can get out of him. Mike McClone still with us, commodity strategist at Bloomberg Intelligence. Help me understand, though, how I will be using crypto in the future.
So the most widely traded crypto on the planet is Tether. It's a digital dollar. It's a stable coin. Now, that's going to get regulation. So if you're a criminal, you're probably better off going through Tether than Bitcoin, because look like they tracked Bitcoin. But that's going to happen. The whole world's going to be using digital money. It's just a matter of time.
But what will I use it for? To send money to my daughter or what?
Everything. Okay. Everything. It's like you do a credit card. It's just a better way to do it. Now, think of right now, we have T+2 when we do transactions 2 days. Mm-hmm. Once we go digital, T+2 seconds. It's just a matter of time. The key thing that I like to point out about this utility is China is doing everything they can to launch a CBDC, central bank digital currency.
Right.
We don't have to. It's already been done organically on the blockchain through Tether, which is an Ethereum token.
Okay, go ahead, Carol.
So who loses in this? Is it the big banks? Who loses in this?
Probably banks losing out. So I've heard the narrative, instead of buying bank stocks, you're probably better off buying PayPal or something, because a lot of transactions are happening via PayPal through cryptos, and it's just how you do it. Now, there's massive speculation, but I'm talking about a stable coin, and the top 3 you have to think about is Bitcoin, Ethereum represents the market, it's the platform, and then Tether's a stable dollar, digital dollars.
Well, if I want to send my brother money, I can use Venmo, I can use Zelle already. But the only problem for me has been internationally.
Yeah.
And that seems like an easy problem they could solve. But here in the U.S., if you're sending money to someone else, it's
do it
easy
pretty
to do.
easily already.
So right now you can do that. I look at people around here and ask them all the time. There's a colleague from Yemen. I said, how do you send money? He said, people get a cut of that. But there's a group called Strike that's going to be able to, you'll be able to do it with cryptos for free, for nothing, via digital dollars. But right now you can do it with Bitcoin. It's just a little more complicated, a little more volatile. But digitalization of that's going to change the whole remittance business, where the bank won't be able to take 4 to 5% of your money.
Well, that's what I was thinking,
it's
right?
all going, it's the unbanked that are really benefiting.
All right, Mike McClone, I'm going to get you for 58 minutes tomorrow, because I just got you for 2 now. Mike McClone's our commodity strategist at Bloomberg Intelligence, right here in our Interactive Broker studio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Fluctuating, little change, up by 1 point. Nasdaq up 40, higher by 0.3%. We were just talking about crypto. Bitcoin now down 5.5%. Bitcoin 32,568. 10-year yield 1.52%. Gold is down $5 the ounce at 18.93. West Texas Intermediate crude up 1.2%. $70.09 per barrel of West Texas Intermediate crude. Equities have been fluctuating around records. Treasuries rose as investors continue to debate the impact of resurgent inflation on monetary policy. Among some of the so-called meme stocks, AMC Entertainment down now by 1.4%. GameStop up 5.7%. Wendy's is surging now by 26.1%. I'm Charlie Pellet. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So as Tim and I mentioned at the top, it feels like our digital world continues to get poked at. We get reminded of the potential holes in that world. Doesn't it feel that way a little bit?
It certainly felt that way at about 6 a.m. this morning.
Well, let's talk about that.
Yeah, so as anyone who was online earlier today trying to go to any common website might have found that they were unable to reach that website. It included
New York
websites like the
Times.
New York Times. Our own Bloomberg.com was affected by this. In fact, British government websites affected by it as well.
Yeah, so let's get into this because Fastly, which helps push data quickly around the internet, said that it had fixed the issue that caused that global outage. And I just think we're learning more about, we just take so many things for granted. So let's bring in why we maybe shouldn't. Bloomberg Intelligence Senior Technology Analyst Mandeep Singh. Let's see what he has to say about it. He's back in our Interactive Brokers studio. So nice to have you in studio. So I just take it for granted. I go online. If there's not a problem, I think there's something wrong with my phone or my service. This was different. What happened?
Well, in this case, it was an outage. An outage could be caused by a number of reasons. It could be, them making a code change, which they moved to production, and that caused an outage. Or it could be a breach or, any sort of a cyber attack. I mean, we've seen so many different types of attacks that at this point, it's hard to say that, one company has a software that can protect you against all kinds of attacks, and that is what we're seeing.
Well, who is Fastly? What does Fastly do?
So Fastly is like an interface that lives between the website you're trying to access, let's say a Pinterest or an Amazon.com. So this is a caching service that sits between the user when they request a URL.
Right.
And they basically authenticate the user to say, this is not a bot, this is a real user. This is somebody who's trying to access Amazon, and it's a legitimate user based on the IP address. Now, what they do is they have these data centers across the world. So no matter where you are accessing a website from, they will make sure you will have a good experience. Even if you are somewhere in Africa or, Brazil or any other country, you will have the same kind of experience because they have data centers across the globe, which is why these popular platforms use this CDN service because of the caching mechanism, the security.
It works,
and all that.
right?
It works.
Keeps it secure.
Yeah.
Well, I think one thing that was particularly striking about this morning's outage was the fact that it was so widespread. Why did it affect websites that
Don't normally go down, too.
that don't normally go down, but range from government websites to media properties?
So the websites didn't go down. It's just that when you were trying to access the website, those websites weren't accessible because Fastly, like I said, sits between the time when you try to access a URL to the time it hits the server of that end website, be it an Amazon or a Pinterest. So really the caching failed, which is why you couldn't access that website.
But they were, those websites became inaccessible because
Correct.
they use Fastly as a client, or they are clients of Fastly's, right?
They are clients of Fastly.
So an easy way for us to figure out who pays what CDN was to figure out who was down this morning.
Yes, that's one way because the common thread was all these websites were using Fastly as a CDN, which is why these websites became inaccessible.
I do wonder about redundancy here, and it's a question that I asked you earlier on Quick Take, because you do wonder if something like this can take down such a, or I shouldn't say take down, make unavailable such a large number of websites. Why isn't there redundancy in place?
So the redundancy can be Amazon or Pinterest can say, we want to use Fastly CDN as well as Cloudflare or any other CDN provider, because Fastly is just one of the CDN providers. Having redundancy within Fastly isn't going to solve the problem. Like Fastly obviously made a code change that affected their entire CDN service. Having, I think, something that was redundant wouldn't have helped in this case. Yes, as a large company, you can use multiple CDN providers, but then at the end of the day, you have to judge like them based on the uptime. So in this particular case, if you are using one CDN, which is Fastly, you can't use an alternative CDN. You can flip the switch, but it's going to take time, right?
You can't have two going at the same time, is basically what you're
yeah.
saying. So it's like a backup battery. You still have to make the switch.
Exactly, and that will take time. So you will have a 30-second or 1 minute outage at least, you know, or if not half an hour, which was the case here.
It doesn't feel like this kind of incident, an outage, happens often. Is that fair?
So Cloudflare, which is a competitor of Fastly, also had a similar outage last year. And that was just a one-off. So after that, no one cared about
somebody
it.
Somebody hit a button wrong. Somebody was drinking coffee and like spilled it on a button. What happened?
I mean, these companies make changes to their code literally every week. Now, you don't know because we are in an environment where, you know, things are so interconnected that developers don't always realize what they're changing. And, you know, in this case, I'm sure there will be a postmortem as to why that code was moved.
It just seems like a major, like, I mean, these are major sites.
Yeah.
I mean, I'm not just saying because it's Bloomberg, major site though too, but I mean, we're talking about the UK government. We're talking about the, like, these are things that people just expect to be there.
Well, I was watching the equity market reaction as this was playing out, and in pre-market trading, Fastly was taking a serious tumble. I mean, it was down 4 or 5% at a certain point. You look right now, it's higher by 9%. What gives?
Well, in this case, I think there's an acknowledgement from the investors that, look, there are only 3 or 4 companies that provide this CDN service.
Yeah, we
learned
that today, didn't we?
They're running critical infrastructure. So suddenly, everyone knows about Fastly. Previously, Fastly was in the background. It was a background service that no one really, it wasn't a household name. Suddenly it is, and it's providing a very important service.
It reminds me of, I remember the Bloomberg story years ago where people were like, if you were streaming, I want to say, I don't know, Sopranos, I can't remember what it was. You were streaming such and such last night and watching it. You were doing it through an Amazon server. Like all of a sudden we learned about Amazon Web Services and just the streaming world. And I feel like that's what's happening with Fastly. Because you said there's only 3 or 4 companies that do this.
Yes, yes. And look, at the end of the day, an outage can happen to any company. It happened to Netflix. It happened to Amazon. I think in this case, they fixed it quickly. I'm sure they'll have to give a reason as to what happened, but most likely it will be a code change, and investors will move on, and they'll be like, yeah, this is important.
Mandeep, we talked about the Colonial Pipeline hack earlier today on this show, and I think a lot of people's brains went right to a hack. What does that say about the environment that we're in?
Well, right now, there is a lot of state-sponsored activity going on, given, you know, what's going on with China, Russia. And these hackers are very sophisticated. They've got deep pockets. So they are trying to find every possible vulnerability point.
And we should note, there's no indication at this point that this was any sort of nefarious activity. This one.
This one, yeah, we don't know. I think the company will come out. If there was a hack, they will come out. Otherwise, you know, you will see a big tumble of this for the stock. Yeah, here.
Right. I was just going to say, we still don't know exactly what happened, or if, again, somebody spilled their cup of coffee, or, you know. Fascinating world we're living in. Like I said, it just feels like our digital world. It's like poking holes, or maybe we're getting a clearer picture of how it all works. Mandeep, thank you. Explain it all so well. Mandeep Singh, he's senior tech industry analyst at Bloomberg Intelligence in our Interactive Broker studio. Wild world, huh?
Yeah, wild world. For those of you listening in New York, D.C., and San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're listening on 106.1 in Boston, Bay State Business is next.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Kellett. We move into the final hour of trading on this Tuesday, June 8th. The Dow, the S&P, NASDAQ are all advancing. Quite a turnaround for the Dow. Have been down 177 points at the worst level of the day, down as much as 0.5%. Right now, the Dow is up 23, higher by about 0.1%. S&P up 5, up 0.1%, and NASDAQ up 56, a gain of 0.4%. Equities fluctuating around records. Treasuries rose as investors continued to debate the impact of resurgent inflation on monetary policy. 10-year Treasury yield fell to the lowest in a month, with the focus turning towards Thursday's consumer price data, which may offer clues on how far the Federal Reserve can postpone a tapering of stimulus. 10-year yield right now, 1.52%. As for the economic backdrop, Sarah House is senior economist at Wells Fargo Securities.
We think that even as you see growth moderate through the second half of the year, that we're still looking at a boom economy as those inventories are rebuilt, as those workers return and support a solid pace of labor income over the second half of the year.
Boeing has expanded its sales lead over Airbus as airlines snap up 737 MAX jets to gird for surging air travel amid the retreat of the coronavirus pandemic in North America and Europe. Boeing shares, they're up now by 0.4%. Southwest Airlines bolstered the tally by agreeing to take an additional 34 MAX 7 planes, the smallest model next year. Southwest Airlines up today by 1.7%. Wells Fargo CEO Charlie Scharf embarking on his biggest push to expand a major business line since taking over, launching a roster of credit cards aimed at competing with popular products from larger rivals. Wells Fargo shares down 1.2%. Recapping S&P up 0.1%. I'm Charlie Kellett, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. It is Tuesday. Carol and Tim in our Interactive Broker studio. We've got to do the Bloomberg Big Take.
This is the Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
All right, it is time for the Bloomberg Big Take. It's on our radar. Biogen's news, Tim, of the FDA granting approval of the company's Alzheimer's drug. And it looks like, man, there's some longer-term repercussions out of this.
Yeah, there certainly are. Joining us now is Bob Langreth, healthcare reporter for Bloomberg News. He joins us on the phone from New Jersey. So, Bob, for people who haven't been following this space as closely as you have, take us back a couple of years about the bet that Biogen made on the drug that was approved by regulators yesterday.
Yeah, so researchers have been trying to design a drug that would target the pathology behind Alzheimer's disease for decades, and drug after drug after drug has failed. And Biogen's drug just 2 years ago looked like it'd be just the latest in a long line of failures. They stopped their trials early. They said they didn't look like they were going to work. And then 8 months later, they shocked everyone. They said they reanalyzed the data and looked like one of the trials that may have worked, and we're going to apply for approval. Changed our mind. We're going to apply for approval, and we think get this drug approved. And then it's been super controversial since then, and there's a lot of debate whether this drug works, but yesterday the FDA approved it, and then the Biogen priced it at a very high price. And now there's going to be a lot of controversy going forward over who should get this drug and, whether it works at all.
Well, and you've been covering this, what Biogen has been up to with Alzheimer's. You also, for those who are loyal listeners and watchers of Bloomberg, you, Bob, have been keeping us up to speed when it has to do with COVID treatments and COVID vaccines. There's been many cover stories by Bob Langreth at Business Week magazine. What's interesting, though, about Biogen, Bob, is that it seems to be, as you guys and you specifically report, that the approval, the FDA approval, appears to signal a fundamental shift in the way the agency thinks about Alzheimer's disease, and this could have lasting ramifications, as you report, for other drugs, whether it's over at Eli Lilly, Roche, and elsewhere.
Yeah, so for years, drug companies, including Biogen, have been trying to prove that a drug for Alzheimer's would actually slow cognitive decline. And it's been really, really hard to do. No one's really gotten clear evidence. And Biogen's drugs, their two trials, didn't really prove it either, because one essentially failed to prove it. The other was still controversial because it was stopped early, though it showed potentially a very small effect in slowing cognitive decline. And no one could agree, what to make out of it. And so what happened is the FDA has faced a lot of pressure from patient groups, the Alzheimer's Association, to approve this drug. They were saying there's nothing out there. We need something. We're willing to take some uncertainty, accept some uncertainty. And what they decided to do is they essentially, in a surprise, they did not make a verdict on whether this drug slowed cognitive decline or not. Basically, the FDA said, we're going to approve it because it removes these amyloid plaques in the brain. It changes some of this fundamental pathology, and we think that is likely to have a reasonable expectation that it'll do something good in terms of patient outcomes in the future, but we're going to have to wait for future trials to prove that it does. So that was a big surprise. That's a big change.
It is a big change, and a reasonable expectation that it will actually have a positive result is not necessarily proof in a clinical trial that it does. And I wonder how this changes the way that the FDA approves therapies moving forward, especially at a time where there's so much skepticism around federal agencies in the wake of what happened with COVID.
Yeah, so this approval is going to be very controversial. Some people are already saying that it was a mistake, and this could set a precedent for other kind of neurological diseases, other neurological drugs, and other drugs for Alzheimer's. Because now they've said for Alzheimer's, you don't have to prove that a drug slows cognitive decline to get on the market. You just have to show some evidence it does something to brain pathology, even though there's a great controversy over whether that brain pathology, how well it correlates with cognitive decline. So it's a big deal.
Right. So, not a cure. We get that, right? But maybe in some ways, and you do wonder if the FDA is kind of allowing a little bit of wiggle room with some of these things, because maybe there's a little bit of improvement, or maybe there's a lot of improvement, or at least stemming the degradation, right, Bob, in some patients.
Yeah, so the way to think about this is not a drug that, even in the absolute best case scenario, under the most optimistic projection, it will not stop the decline. People are still declining steadily, but maybe it slows it a little bit, and that's what they're saying. That's what the Alzheimer's patients that I talked to want. They're saying, there's nothing out there. We want something of this, may slow the decline a little bit, and this is good enough. We're willing to take some uncertainty and improve it now, and that's what happened. So it's very controversial and very interesting.
But it's funny because I'm going to talk about a stock gainer later, Cassava Sciences, and they've had no products in the market for 20 years, but apparently they're working on an early stage Alzheimer's drug, and I think are getting a bit of a pop because of what happened specifically with Biogen's drug. So it is making everybody look, especially when it comes to Alzheimer's, Bob, a little bit differently at the space and in terms of treatments.
Yeah, other stocks are going up. Eli Lilly went up yesterday because they have a similar Alzheimer's drug and just going into phase 3 trials. So they went up, and the prospects they might be able to get an approval sooner. So no question there is potential ramifications across the industry.
Bob, $56,000 for a course of this. It's just a massive amount of money. What typically happens with the drug price? Does it go down after a few years?
Just got about 30 seconds here, Bob.
No, the drug prices, as far as we can tell, basically never go down. They promise not to raise it, but what I can say is there's at least 1 million people in the U.S. who could theoretically qualify for this drug, cost $50,000 a year. Do that math. If everyone in that theoretical group gets it, that's $50 billion.
Wow. And you talk about expensive brain scans and then to administer the infusions. It's not an inexpensive process. Hey, Bob, though, thanks for just digging deeper into this to explain why, though, it has been so significant. We've certainly seen the stock pop yesterday, a little bit of a pullback in today's trade when it comes to Biogen, but definitely watching it. Bob Langworth, healthcare reporter at Bloomberg News, on the phone in New Jersey.
Let's get a quick check of world and national news with the latest from Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. A Senate investigation of the January 6th insurrection at the U.S. Capitol has found a broad intelligence breakdown across multiple agencies, along with widespread law enforcement and military failures that led to the violent attack. Senate Majority Leader Chuck Schumer is criticizing the report for what it did not investigate, the actual cause of the riot.
If anything, the joint report by the Homeland Security and Rules Committees has strengthened the argument for an independent commission on January the 6th.
The report did reveal more about the injuries suffered by the officers defending the Capitol, including chemical burns, brain injuries, and broken bones. The FBI has announced a massive worldwide takedown of criminal gangs that involved intercepting their encrypted communications. The FBI says the gangs divulged their plans for moving drugs and carrying out killings by using a messaging app that was secretly run by the FBI. West Virginia Democratic Senator Joe Manchin says he is still against a sweeping bill to overhaul federal elections, even after speaking today with members of civil rights groups, including the NAACP and the National Urban League.
It was a very, very good meeting, very productive and very informative. And I'm very honored that we all got the chance to speak, to listen to each other, and that's really what it was about, to learn and listen.
Manchin says the bill revamping federal elections is too broad and cannot pick up GOP support. Democrats say the bill would help protect voting rights, including those of minorities in states where they say they're under attack. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We are talking an awful lot about the crypto world today.
Yeah, we are, specifically this time about Goldman Sachs' investment in a blockchain backbone firm called Blockdaemon.
Yeah, and it was interesting. Mike McGlone, on his way out, he follows the crypto world for us here at Bloomberg Intelligence. He was like, I met somebody at that crypto conference, Bitcoin conference in Miami, and actually they were talking, or I think she was from this place, and it was just funny how it's like all coming together.
What he told me, and what he told us in our radio audience when we spoke to him a few minutes ago, that really resonated with me was he met up with all these people he knew from his previous life as in commodities. And they are now taking this seriously.
Well, and I thought what was interesting, too, is he said there was somebody from the accounting world and someone from, what did he say? Was it the banking world? Like, it was all these different worlds within the kind of big financial umbrella.
And I don't want to say previous life because he still does commodities, but he focases so much on blockchain and crypto right now.
He's our Superman crypto guy.
He is.
Blockdaemon, it's a firm that creates, not related to Matt Damon, but I kind of want to go there. It's called Blockdaemon. It's a firm that creates and hosts the computer nodes that make up blockchain networks, raising $28 million from lead investor Greenspring Associates, as well as from Goldman Sachs.
Well, this firm planning to use the proceeds to double its headcount to 100 and to make acquisitions. That's according to the CEO, said in an interview with our own Matthew Leising. The company said that they've seen rapid growth in the past year and has won customers including JP Morgan Chase and Citigroup.
Yeah, exactly. And listen, we've been seeing investors pumping a lot of money into various cryptocurrency projects, into Coinmetrics, Paxos Trust, Digital Asset Holdings. I mean, there's a lot going on. We know that. And what Mike said when he went down to that conference, another thing that stayed with me is he was trying to decide, okay, was that conference and that gathering, so many people in that place, a sign of the top or a sign of kind of legitimacy? And he thought more the legitimacy side.
Well, to that end, Carol, in May, Goldman Sachs led the $15 million investment in Coinmetrics. That's a cryptocurrency and blockchain data provider to institutional clients. And the company also contributing $5 million to the blockchain round. Richter said that it's been a long dialogue with them.
He also said, Mike McClone, like there's 10,000 and counting cryptos out there.
Wow.
Like, that's a lot. You're listening to Bloomberg.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session, but a big rebound for the Dow Industrial. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green in quiet trade with the Dow currently up 25 points. S&P's rise 6, NASDAQ gains by 64. The U.S. 10-year yield at 1.53%. Bitcoin sinks 5%. And WTI crude topped $70 a barrel for the first time since October of 2018. Among the main 11 S&P sectors, leaders were consumer discretionary and energy. Utilities were under pressure. And leaders to the upside in the Dow, Apple, Chevron, and IBM, while Procter & Gamble led to the downside. In other news, Ford says there is a risk the chip shortage will spill into 2022, and MicroStrategy boosted its Bitcoin-linked junk bond deal to $500 million. Wrapping things up, Casey's General Stores reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And as you hear live breaking news over at your Bloomberg, type squawk SQUAWK on your terminal. I'm Charlie Pellet. This is Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. So, yeah, this definitely caught our attention. I'm wondering if we asked all of you what country seems incapable of abandoning a disastrous diplomatic strategy, Tim, what country might you say if you hadn't read the story?
If I hadn't read the story, well,
But
now
you
I
have.
know. I'm cheating.
Okay.
China.
Exactly. So let's get into it. Here with more on China's wolf warriors, which is a terminology I hadn't heard of, and how they are turning the world against Beijing. Reporting for Bloomberg Business Week is Bloomberg Defense Policy and Intelligence reporter Peter Martin. He is on the phone in our Bloomberg 99.1 studio in the nation's capital. Peter, amazing story. So who are the wolf warriors of China?
Yeah, thanks. They're this band of new Chinese diplomats who have kind of taken Xi Jinping's vision for a more assertive, more powerful role for Beijing and expressed it from the podium of the foreign ministry and in meetings with their foreign counterparts. And they're kind of ruffling a lot of feathers around the world.
Yeah, take us into some of the specific instances that you document in your piece.
Yeah, I mean, I think that the most shocking occurrence happened in the last year of the Trump presidency when a foreign ministry spokesperson actually suggested that it was the U.S. Army which had helped to spread the coronavirus, starting in Wuhan. But there have been other incidents ranging from Chinese diplomats saying that the French government was leaving people to die in care homes, to picking fights with members of, the Brazilian ruling family, and so on and so on. It's really been quite a sweep of incidents.
Why are they doing this?
I think a couple of things. I think on the one hand, Chinese officials feel kind of emboldened, and they've watched the way that the West has handled the virus, and they feel pretty good about their system and their role in it, and their role in the world. I think on the other hand, Chinese officials are worried about making sure that they stay on the right side of Xi Jinping. This is a guy who has punished 1.5 million officials in his anti-corruption campaign, and they want to do anything they can to stay on his right side.
Well, I wonder, though, about public opinion and international opinion and the way that governments are responding to this, and to what extent the Chinese government actually cares about a more unfavorable view internationally.
Well, I think that's a great point. They've really taken a knock internationally, but I think a lot of people in Beijing think that, our star is rising, the United States is waning, and the government always seems mired in gridlock. And frankly, if we need to spell out our bottom line in ways that upsets people, then that's something we can deal with.
It sounds like, Peter, that China is very aware of what they're doing. They're comfortable with it. They've set out this long-term strategy when it comes to the industries they want to develop and cultivate within their country. And they're comfortable about kind of where they are diplomatically, politically, geopolitically. I mean, it just sounds like they're comfortable with their vision and moving forward with it.
I think they've been comfortable over the last year or two, and it was easier to be comfortable with this while President Trump was also insulting allies all over the place and disparaging international organizations. I think it's going to become more difficult if President Biden manages to actually pull off some of the cooperation he wants to see with US allies. That's going to be quite intimidating for Beijing. And there are already hints that President Xi is starting to rethink these tough tactics. But we'll have to see if that happens in practice.
What are those hints?
Well, he led a study session of the Politburo, China's ruling Politburo, last week. And he said that he wanted Chinese diplomats and the Chinese government to cultivate a more lovable image for China. And, you know, I think it's fair to say that the way Chinese officials have behaved over the last couple of years has been anything but lovable. But we'll see in the next weeks and months whether they're able to deliver on that.
What does it also say about the character of President Xi himself and kind of where his head is with all of this?
That's a great question. President Xi Jinping is someone who grew up in the Chinese political system. His dad was a senior official under Chairman Mao who lost power and was criticized in the streets. He was imprisoned. He had a really tough time. Xi is someone who understands what's at stake when it comes to Chinese political power struggles. And he kind of takes that very tough ideology and applies it to global affairs. And I think that might help to explain some of the abrasiveness we've seen from China in recent years.
Hey, Peter, I wonder about the type of power that China has when it comes to really holding the cards here, because there are so many American firms and multinational firms that want access to the Chinese consumer, to the Chinese market. So I'm wondering what they'll tolerate from China in order to get that access.
It's an absolutely crucial question. You know, this idea that China controlled market access to 1 billion customers has always been kind of the trump card that the Chinese have held. And it became especially important as lots of consumer-focused US multinationals came to see themselves not just as US companies, but US-China companies. I think the question now is, can Beijing maintain that kind of support from multinationals on Capitol Hill and elsewhere? Or has the business community also had enough of this behavior?
Right, and I wonder if they need it anymore, right? Because the China has its own big domestic market. They're raising their own domestic companies. Do they really care so much about global commerce? Just quickly, Peter.
Well, I think the thing is, right, like companies want to be able to tell their shareholders they can deliver growth. And if you're looking to growth, 1 billion consumers look pretty good.
Yeah, exactly. Peter Martin, reporter at Bloomberg Businessweek, joining us from our 991 newsroom in the nation's capital, Washington, D.C. All right, coming up, we've got the chart of the day.
And the song of the day.
I wonder what it'll be.
Yeah, well, I made a fool of myself yesterday.
I'm sorry.
That's okay. I got some flack on Twitter. It's okay. Send it my way.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Fool.
What'd you say?
Were you really made a fool yesterday?
Oh, I made such a fool of myself.
Did you try and Google it?
No. I do this. I have my hands up. If you're watching on YouTube, you can see. So, Dave, what I need is you here to distract me. You know, it was a lot easier when Dave was working from home.
You could cheat easily. You'd actually believe, like, oh, you got that one.
I mean,
Good.
I guess I could kind of like, if you're watching on YouTube, you can see this, but I can kind of like, look like that. Anyway, yeah, song of the day, stock of the day, and chart of the day.
No cheating of the day. We're going to try. Fingers crossed. You can see that on YouTube. Let's get to your top business stories. Another check on that trade today. Charlie Pellet.
Oh, had I known you guys in college, how much fun might we have had in classes with all this talk about what you guys are doing when Dave Wilson's not in the studio. Here's what's going on. We have got the Dow, the S&P, and NASDAQ. They're all advancing right now. 28 minutes to go ahead of the closing bell. Equities, they are fluttering around records. Treasuries rose as investors continue to debate the impact of resurgent inflation on monetary policy. The record, by the way, on the S&P is 42.32. Going to go decimal on you, 0.60. Right now, we have got the S&P 42.31, up now by 5, a gain of 0.1%. Got to stay with us right through the closing bell to see how things shake out today. The Dow up 14 right now, up less than 0.1%. NASDAQ up 59, up 0.4%. 10-year yield 1.52%. We've got gold down $5 the ounce, down 0.3%, 18.93. And West Texas Intermediate crude up 1.4%, 70.18 a barrel. The U.S. and the European Union are set to back a renewed push into investigating the origins of COVID-19 after conflicting assessments about where the outbreak started, this according to a document seen by Bloomberg News. The State Department is loosening its travel warnings for nations around the world, including France, Canada, and Germany, in a move that could loosen airline restrictions for people wanting to go overseas. Pfizer and BioNTech's vaccine will be tested in children less than 12 years old in a late-stage study. One risk factor for a bad COVID case is obesity. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
I would argue, even though in the United States we might look good in terms of nutrition, we have a different part of malnutrition. We have an obesity crisis in the United States, and I think the fact that most Americans are overweight really did synergize with COVID-19 and get a lot of people sicker than they needed to be if we weren't such an overweight, obese country.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we track, Pfizer down 0.4%. ADRs of its German partner BioNTech lower now by 6.9%. ADRs of AstraZeneca down 0.2%. Moderna lower now by 2.6%. Johnson & Johnson down 1.1%. Chipotle Mexican Grill said it implemented price hikes across its menu and projected restaurant sales growth, sending shares of the burrito chain higher. Right now, we have got Chipotle Mexican Grill shares up by just about 1.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Yeah.
It's so great.
Look,
it's so great to have you
look,
back.
YouTube.
Carol.
No hands, no hands.
It's so great to have you back.
Thank you. It's good to be back.
Well, you got to understand, Sting's voice is pretty distinctive.
It is.
So if you have any familiarity with the Police or Sting as a solo artist.
I love the Police. I love Sting too, but I love the Police. They're just fun, right?
Yeah.
All right, so I missed the chorus there.
So Lonely. That's the title of the song. You were so busy celebrating the band, you forgot to mention the name of the song.
How often do I really? Or we?
Yeah. In any case, you got to be feeling a bit lonely perhaps if you're an investor in financial stocks. And that's really the point of today's chart. David Kastner, who's a senior investment strategist over at Schwab and focuses in on sector analysis. The other day he lowered his rating on financial stocks, the equivalent of hold from buy, or, to use his language, market perform from outperform. And one reason is that you've seen the financial stocks gaining strength even though they haven't had the support from higher treasury yields that they did even a few months ago. And the chart really focuses in on what's been going on since the middle of April or so. That's when you saw the ratio between the S&P 500 Financials Index and the broader S&P 500 hit a low, and then popped up as much as 9%. And over that period, you saw basically no change in the 10-year treasury yield. So it's a real contrast to the relationship over time, which the chart defines going back to mid-2018. So, that's really the question. At what point does this sort of contrast get resolved, and how does it get resolved? The concern, at least on Kastner's part, is that it gets resolved by the stocks kind of turning tail a bit, at least in relative terms. Now, not everybody feels the same way. It's funny. Today, I saw a chart from Chris Barone of Strategas up on Twitter, and he figures the financial stocks are more telling. So, we'll see how this all shakes out. For the moment, though, if you haven't seen the chart, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The address, dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So who's right?
Well, that's the question. I mean, analysts are agreeing to disagree. I mean, there's a lot of focus on this particular area, though. I noticed that Jonathan Krinsky at Baycrest Partners was looking at regional banks from the same perspective. And, he figures maybe the stocks are really telling the story. But like I say, Kastner over at Schwab has a different view.
So interesting. So you're comparing financials versus the S&P 500 overall.
Right. So it's really relative strength. Yeah.
Okay. Got it. Well, it's, because listen, we look at the financials, we look at what the treasury market and interest rates are doing to kind of get an idea of, the concern about rising interest rates, the concerns about inflation. So it is interesting to kind of see this.
Yeah, absolutely.
Kind of
financials have been among the top performers in the S&P 500 this year. So that's something else to keep in mind.
Yeah. They've had a pretty decent run, haven't they?
They have.
Yeah.
No question, up more than 20% this year.
Give us a little preview of your stock of the day.
Organon. This is a newly created company focusing on women's health and some other areas, spun off from Merck last week. Now, the shares initially rose about 5% on the first day of post-spinoff trading. Since then, Friday down 7.7%. Yesterday, down 8%. Today, as we speak, down 7.5%. So you're looking at the third day in a row with declines of 7% or more. The ticker on this one, OGN, Organon.
Not a good trend line.
No.
Unless you're shorting it.
Not at all.
Right?
But how do you short it? I mean, it's a brand new company.
Exactly.
So, that may be a little difficult at this point.
Yeah, and I'm thinking about, you said Pfizer spinoff, right? Pfizer's done.
Merck.
Merck spinoff. Okay.
Yes.
Interesting. Good stuff. Be sure to check out Dave's stock of the day again, 4:15?
4:15 Wall Street time.
All right, good stuff. Dave Wilson, our stocks editor here at Bloomberg News.
You can do that on LinkedIn, Facebook, and of course on Twitter as well.
He's everywhere.
He is. In the meantime, let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim, the CEO of Colonial Pipeline is defending his decision to pay a ransom to the hackers who shut down the pipeline. The attack caused a run on gas along parts of the East Coast. Joseph Blount spoke before the Senate Homeland Security Committee today.
I know how critical our pipeline is to the country, and I put the interests of the country first.
Blount also apologized for the attack's impact on the gas supply chain. The Biden administration says it's taking action to address the supply chain crunch in semiconductors and more. Bloomberg's Nathan Hager reports from Washington on the president's new plan.
It is a multi-pronged strategy aimed at addressing bottlenecks in industries ranging from medicines to microchips. The White House says it will establish a supply chain disruptions task force led by Commerce Secretary Gina Raimondo, as well as her transportation and agriculture counterparts Pete Buttigieg and Tom Vilsack. In a 250-page report, the White House says the U.S. should break with decades of free market ideology and ensure more local manufacturing and shift away from low-wage, low-standard nations. In Washington, I'm Nathan Hager, Bloomberg Radio.
Trainer Bob Baffert is now suing the Kentucky Horse Racing Commission, calling for more tests of Derby winner Medina Spirit. Baffert continues to argue that the banned substance found in the horse's blood was the product of a topical ointment, not an injection. He's claiming the urine samples could prove where the substance came from, and he says the rules do not specify a ban on using the steroid in a topical ointment. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, Tim Stanovic in our Interactive Brokers studio. Plexiglass, it is everywhere.
So hot right now, plexiglass.
I know, I've got plexiglass around my desk.
Yeah, I do too. I was at a restaurant last week, and
Yeah.
I made a comment because it was a crowded restaurant. It was my first time eating inside. The sides of the building were open, okay?
Yeah.
But it was packed, and it felt like it was New York before, but they had plexiglass between different groups. And I made a joke to my friend. I was like, oh, good thing they have the plexiglass there because it'll completely stop any sort of, infectious disease from spreading.
Those words, Tim Stanovic, sparked this story. Carrie Goldberg writing the story at Bloomberg News. Sales of plexiglass, check it out, everyone, tripling to roughly $750 million in the U.S. after the pandemic hit. Like, it was overnight. They were around desks. You go into a shop. They were between the checkout and U.S. They were everywhere.
Okay, but here's the thing. What? Not a single study, as Carrie points out in the piece, has shown that a clear plastic barrier actually controls the virus. That's according to Joseph Allen of the Harvard T.H. Chan School of Public Health.
Well, and what happened was the first few months of COVID-19, top health authorities, they pointed to larger droplets as the key transmission culprits, despite a chorus of protests from researchers like this Mr. Allen, Joseph Allen, over at Harvard. Listen, to be fair, we didn't know a lot.
I was thinking the same thing.
People were shopping for groceries and leaving them out in the garage for 24 hours or wiping them off with everything.
Or taking their mail and putting their mail outside for a few days to have the sun bake off any sort of germ.
Or if you went to work, you came home and you stripped down in your garage and changed into a new thing or jumped in the shower and put it in
Rubbed
new
your
clothes.
hands so hard.
So we didn't know.
We didn't know. And look, I think a lot of it has to do with this idea of what gives people security, what makes people feel safe. And that was a big topic at the beginning of the pandemic. And it was like people were doing what they could in order to feel some sense of security. Maybe that meant buying a lot of toilet paper. Maybe it meant buying a lot of cleaning supplies or wiping down your cell phone whenever you got home. But that's what they did.
And to be fair, I'm going to say that when I saw plexiglass, I felt like it was good to have a little bit of separation. I even, felt it at the office.
Felt the same way, Carol.
All right, folks. Check that story out at Bloomberg.com and more. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Potter. We've got 13 minutes to go ahead of the closing bell. The Dow just turning negative, virtually flat on the day. S&P higher, barely up by less than 0.1%. Close to a record, 3 points away right now on the S&P. NASDAQ up 49, a gain there of 0.4%. Equities fluttering right around records. Treasuries rose as investors continue to debate the impact of resurgent inflation on monetary policy. 10-year yield 1.52%. Right now we've got the NASDAQ 100 index up by 0.1%. Small caps outperforming. Russell 2000 up 1.1%. Dow Transport's up now by 0.3%. Gold is down 0.3%, 18.93 the ounce. West Texas Intermediate crude closing above $70 a barrel, 70.20 on WTI, a gain today of 1.4%. I'm Charlie Pellerin. It's Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everyone. 10 and a half minutes left. I'm just adding a few minutes onto the trading day. 10 and a half minutes left in today's trading day. It's kind of a meh kind of day, not really going anywhere. So let's see what Eric Jackson has to say. He's founder and president of EMJ Capital. It's a Toronto-based hedge fund, and he joins us on the phone in Toronto. So good to have you back. How are you?
Hey, I'm doing well. How are you, Carol?
Doing well. Tim and I are hanging in there. The world's reopening. We're trying to make sense of, here we are. We've got U.S. stocks near a record. You've got, if you look at the global market indices, we're hovering near records. How do you see this market environment right now?
Well, you guys are just talking about inflation, and obviously everyone's waiting for a few, more shoes to drop and to kind of better get a sense of where things are going. But if you look in the tech world specifically, we've had such a reduction in a lot of the multiples across the tech universe that you're really being, you're able to get into a lot of names in tech at, oftentimes pre-pandemic multiples. So you're getting some protection no matter kind of what happens through the rest of the year with all the inflation data that comes. So that's not across the board. I think a lot of the SaaS stocks are still expensive, but a lot of things are attractive.
Like?
Well, in general, I think the FANG names are definitely, they've sort of been in a one-year trading range, and their multiples are extremely low. I think they are all attractive. I think, for me, there are a few names that I like in particular. There's one stock, which I recently got into called Magnite. The ticker is MGNI, and basically they serve up the ads that go into connected TVs, which people are increasingly turning to. It's not just a Facebook and Google world in terms of serving ads when you turn on Roku or your Samsung TV or whatever. And so a lot of people are familiar with a company called The Trade Desk, which serves the same kind of ads from the demand side, meaning they work with the agencies. But Magnite is a sort of an amalgam of three different companies that has been put together over the last year that works on the supply side, and it trades at half the multiple.
Eric, you mentioned other shoes dropping when it comes to inflation. What would those be?
Well, obviously, we're speaking on a day when the 10-year dropped. That's been, been met with a sigh of relief, I think, by a lot of tech investors. We got ourselves all, wound up over the last month or so with fears that the 10-year was just going to bust through, to new highs and above 2% and all this kind of stuff because of some of the hot inflation numbers that we're seeing. So, in the meantime, lumber's cooled off. Some of the commodities have cooled off. That's good for tech, obviously, and these growth stocks. where you're looking out multiple years and so forth. And so we just need to continue to monitor where things go from here. Is it truly transitory inflation data, or is it something more permanent?
Hey, listen, one thing I want to ask you is Liz Kaplan-McCormick and Rich Miller have a story on the Bloomberg, and we're going to talk about it with our TV team in just a moment on Beyond the Bell. The economist who helped change the way the Fed assesses long-run inflation expectations says their current level means the central bank needs to start laying the groundwork for shrinking its massive bond buying program. And this is specifically, we're talking about Brian Sack. He was at the Fed Board of Governors almost 2 decades ago, and he was head of monetary and financial market analysis. He championed the use of a forward measure of inflation expectations to help guide policy. He's now over at D.E. Shaw. He says the so-called five-year forward break-even inflation rate has climbed to a level where further increases would be problematic for the central bank. So when you have someone like that who really understands this, and created a tool used by the Fed to predict inflation or at least get an idea of where it's going. And when he says maybe it's time that the Fed changes policy, how do you factor something like that in? Here's a smart guy who understands it, understands what's going on. Do you say, wait, this is a different market environment or what?
Well, I think one of the interesting things, you go back a couple of weeks ago when people were really worried about inflation, across the equity universe. I think, you could say that the Fed had given this language that they were going to stay low for so long, and I think the concern was that are they really out of step with other central banks around the world who are starting to taper? And what's been interesting is that the Fed hasn't really changed, but there have been a couple of statements that have come out that have sort of talked about their openness to tapering, and I think just the fact that has gone out there, along with softer commodity inflation and numbers and so forth, I think that's given people a lot of comfort that the Fed's not out of touch. They sort of see what's going on. They're going to taper if they need to later this year, and I think part of the reason behind the 10-year dropping has just been comfort with the fact that they're not, that they don't have their head in the sand.
So what happens if we do start to see signs of inflation that you think isn't necessarily transitory? What do you do specifically to get defensive?
Well, inflation is not good for all, any stock, really. People like to say, get defensive, do this, do that, and go into value. All stocks will go down if we're truly, back into this, permanent inflation era. So, I don't think any of us want to see that. And there's obviously a big, a big spectrum between where we are now and something like that. So I try to look for, when I'm specifically looking at in the tech universe, tech stocks are most variable with inflation news and most prone to big dramatic pullbacks. And really that's why, even though we're at market highs, the one corner of the universe in stocks that has really been hurt in the first half of this year has been the growth tech area so much. So I think there are still a lot of interesting tech names that are more value-ish plays, and so I'm looking at names like that, and cash is always a great position in those kinds of environments too.
Hey, one more minute left here. We always love talking names with you. HelloFresh, which is a delivery service based over in Berlin. You like them? How come?
Everyone says, it's time to get out of the pandemic stocks, get into the value, oriented stocks. Like that's sort of like a cliche these days. And if there ever was a poster child for a pandemic stock, it was probably HelloFresh last year, as people stayed home and they ordered these meal kits. But what's interesting is if you go beneath the surface, this is still a very small potential market that's been penetrated in terms of U.S. households and global households who use these meal kits. And they didn't have to do any marketing last year because there was such high demand. Now you're probably seeing their TV ads all over the place. Some people say, well, it's not a sticky customer, a lot churn out. That's true, but a big chunk of those new customers that come on board, about 20%, stick around for the long haul. And this is a profitable business. It's just getting started. They can move into adjacent meals and grocery delivery areas as well. Very smart management team.
Eric, very briefly, even past pandemic, when we go out and we go to the stores again and we go to restaurants?
Well, right now their competition is, are you going to pick up your meal at the grocery store on the way home and cook, and heat it up for yourself, or are you going to go out to dinner tonight or whatever? And a lot of people are still going to have to get something for dinner on their way home. That's who they really are going after.
All right, going to leave it on that note. Hey, always good to get some time with you. Really appreciate it. Eric Jackson, he's founder and president of EMJ Capital, joining us on the phone from Toronto, doing this as there's just about a 1.5-point gain on the S&P 500, just barely higher. NASDAQ still down about 21 points, and the Dow down about 19 points. The NASDAQ, the outperformer, up about 45. All right, folks, coming your way in just a moment. We've got Beyond the Bell with our Bloomberg TV team. We're going to count you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here alongside Caroline Hyde, Taylor Riggs, counting you down to that closing bell. Here to help take us beyond the bell with our global simulcast team, Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. Carol, another interesting day here, coming close, but not quite above record highs on the S&P 500.
Right, and when all is said and done, not a lot of moves here. The NASDAQ really the outperformer, but let's remember perspective, everyone. In terms of U.S. stocks, we're pretty much hovering near records, and we are when it comes to global stocks as well. And the Treasury market, that's going to be one thing we've got to talk about today, because that 10-year Treasury falling to the lowest in a month, Tim.
Yeah, it certainly seems like investors are kind of taking a wait-and-see approach to the inflation data that we get later this week. And, Dave Wilson, stocks editor, made a really good point on our show earlier today when he said we're kind of in this lull right now when it comes to companies reporting. Tail end of earnings season, next couple of weeks, we're going to see the end of the quarter at the end of this month, of course, but then don't get too used to it because banks start reporting in just about a month.
Yeah, well, and before we get there, we're going to get CPI on Thursday, I believe it is. There's certainly a lot going on within the world of some of the inflationary conversations. And I think, Caroline, what really sticks out to me is as bond yields come down, big tech is usually the big outperformer, and we're not seeing that today.
We're not. We're seeing a little bit of a bounce back, some record highs being hit. But guys, we've got to talk about the fact that the action is in the small caps. The action is in the meme stocks. I'm looking at Clover Health, 13 billion in terms of being transacted.
What's that up now?
AMC, also up. These are companies that are just taking over in terms of volume.
Yeah, and that's probably one reason why the Russell 2000 actually came within about 13 points of that all-time high that stood since March 15th here. The S&P 500 at one point did actually trade above its all-time high as well. It's not going to close above it. 4,227 right now as we wait for these numbers to settle. That's relatively unchanged on the day. The NASDAQ Composite higher by about 0.3%, 13,924. The Dow Jones Industrial Average looks like it's going to finish in the red fractionally, 34,600. And as far as your Russell 2000, if I could take you there real quick, 2343.75, I believe, is where we're going to settle at. That's up about 1%. Remember, that all-time high is at 2360, Carol.
Yeah, exactly. And we're going to talk about those major industry groups in just a moment, but it really does feel like in this trade today that inflation concerns have calmed down. Taylor, you mentioned Thursday we're going to get a read on CPI. We'll see whether or not that ignites some of the concerns within the marketplace.
Well, you see that on a sector level with energy, the second best performer on the day. You're up 0.9%, by far the best performer up the year when you're up anywhere from 45 to 50%. Retailing is the other one that we're watching, 1.5%. And then, of course, technology, as yields have been coming down. Big tech typically benefits from a lower discount rate on those cash flows. We migrate lower for our radio audience. We're off anywhere from 1 to 1.5% on some of the biggest decliners. Tech's in there, food and beverage, utilities. A lot of those bond proxies and safe havens actually tend to be some of the underperformers today, Carol.
Hey, I want to talk about the overperformers or overachievers, if you will. And some of these are not household names, but Cassava Sciences. Check it out, everyone. It's a small biotech company. It is your top biotech company so far this year. It's up more than 900% and basically riding the tailwinds to some extent of Biogen and getting that FDA approval for its Alzheimer's drug. They have an Alzheimer's drug that they're working on. Keep in mind, they have no products on the market in the past 20 years. That stock was up about 2%. So watching that. Caroline, you mentioned Clover Health. That share post.
Wild.
I know.
Wild.
Like the social media frenzy on this one again. Chamath Palihapitiya, he is backing this health insurer company. And I got to point out, short bets on this company up around 36% of free float, but this stock was up 86% in today's session. Want to mention Wendy's. We talk about these meme stocks. We're going to get into it in just a little bit. Climbed to a record. It's kind of the new meme stock in town. Of course, we know it for its burgers and its fast food restaurants, but it's getting some traction on social media. Want to mention Amazon, some fundamentals, because the company coming out saying it's going to offer 6-month, what? Oh, fundamentals?
Those?
Remember when we cared about fundamentals? They're going to offer a 6-month prescription starting at $6. So they're going after the uninsured, those paying cash. We saw Amazon up, also in today's trade, up about 2%. Wendy's, though, up 26%, Tim.
Hey, Carol, you mentioned fundamentals. Investors certainly caring about fundamentals when it comes to Lordstown Motors. The company telling investors late today, just before the markets closed, that it needs more capital to complete the development of its EVs, get regulatory approval, and begin commercial sale, essentially saying conditions raise substantial doubt regarding our ability to continue as a going concern. Shares cratering this afternoon, finishing the day down more than 16%. The sell-off in cryptocurrency that we saw happen today, unsurprisingly, hitting crypto stocks as well. Coinbase down more than 4.6%. Riot Blockchain down more than 2.6%. CureVac on the vaccine front falling today more than 12.5%. This after a Reuters report said that the European Medicines Agency doesn't expect to make a decision on the approval of that company's COVID-19 vaccine before August, Caroline.
Meanwhile, what's also on the downside is, well, most of your currency pairs vis-a-vis the Bloomberg dollar index. We're going to go across asset now for our radio, TV, YouTube audiences. I'm looking at global macro movers, and on the FX side of things, it's generally a sea of red versus the US dollar, which closed up about, well, it's not closed obviously, but up 0.1%. The US dollar index doing well as we perhaps get a little bit of caution ahead of the inflation data that we have on Thursday. All eyes tracked on that. Will that be a concern? Dollar goes higher, British pound off by 0.2%, the yen off by 0.2%, but it's really the commodity-related currency pairs that did the worst. We see the Canadian dollar off by 0.25%. Let's go to commodities now, though, because I want to shine a light on what Remain did so well at your general close of trading for, well, the WTI for the oil areas. Commodities, we saw WTI crude up 1.5%, but importantly, above $70 when you got settlement at around 230. So clearly money once again focusing in on the demand, the appetite, the want to get driving here in the United States, the Chinese buying, money moving into commodities. It's a sea of green there. Meanwhile, it's also a sea of green when you look at sovereign bonds. Taylor, we go worldwide, yields coming down, particularly in the likes of Europe, Portuguese, Spanish debt off by about 5 basis points.
Yeah, you're seeing yields come down across the curve, Caroline. And so often I know that we joke on this program. We talk about rate of change. We always do that on the way up. We never do it on the way down. What catches my attention is, yes, a 4 to 5 basis point move down in yields as we think about bond price higher, yields lower. Really, all of this inflationary comments have been, well, really put on the back burner. And Carol, I think what really stands out to me is it's days like today when all of a sudden inflation takes a back seat, and yet the implications for the Federal Reserve. We've had commentary from Bill Dudley yesterday, and then of course today Brian Sack, who is now with D.E. Shaw, who really, sort of changed the way that the Federal Reserve thinks and incorporates inflation into their data. He's saying that the 5-year break-evens are now at a point at about 250, where the Fed needs to really start thinking about this and thinking about moving.
Yeah, he's saying if there's further increases, this could be problematic, and that the Fed has to kind of think about it, maybe a shift in policies. We just had Eric Jackson on over at EMJ Capital. He runs a hedge fund out of Toronto, and he says, listen, the Fed has given us lots of language. They're on it, they're watching it, they're data dependent. Yeah. And so if something changes, we know the Fed can shift policies, right? That can happen in a meeting.
I think this interview with Sack is interesting. Obviously, he's a lot smarter than all of us, but when you look at that chart that we had on the screen for our radio audience, which showed that five-year rate here, and the idea that it's risen. But when you go back, at least in the post-financial crisis era, we're still trending below where we were during that time. And there's a big question here that even though we've risen, the fact that we're still below that trend line over the past few years, if the Fed didn't move then, why would it move now? The mandates changed.
Yeah, that's a really good point. Hey, some stocks that don't seem to be too concerned at all with inflation are those meme stocks. We talked about Clover Health already, guys. And the fact that Wendy's is now considered a meme stock has me, Caroline, asking the question, okay, what makes something a meme stock? Does it just mean that it has like a rise that's completely disconnected from any sort of fundamentals, or does it mean that it's talked about in the Wall Street Bets forum?
Yes.
What does it mean? I mean, how do we define meme stock?
Check, check, and check, right?
Seemingly, it doesn't need to be a heavily shorted stock, because this is where Wendy's stands out.
Right.
Clover Health, highly shorted.
Yeah.
So too are the other, like, so the GameStops of this world, the AMCs, but not so Wendy's. Wendy's, there's much theorizing on whether it's just because Well, we like to talk about chicken tendies when you're on the likes of Reddit, and that's what you can get over at Wendy's. But this also, more seriously, Taylor, speaks to what the Federal Reserve is doing.
Absolutely
Cheap money,
not.
money moving into
It
areas
is
to be
all fundamentals, Caroline. It is the salad of the summer.
But you put
that is
strawberries in.
coming
What are you
from-
doing? Yeah.
But don't you ever wonder, like, think about these names we spend so much time on, and I understand why they're being talked about in these chat rooms, but when you look at them at the context of the financial markets as a whole, it's so minuscule, and it's interesting how much attention we've been paying on it, guys.
But the crowdsourcing, I think, of some of these trades is drawing a lot of questions. I mean, we were speaking with Jim Paulson of the Luthold Group a little bit earlier on the close, and he really raised this issue here of how regulators would even approach this. I mean, when you go back, I mean, Carol, you know this. You've been covering this a long time. In the old days, if you had market manipulation.
What are you saying there?
Well, no, I'm not saying it. We're in the same age bracket, so slow down. But look, we're you know, you go back, it was a lot easier. I won't say easier, but it was a little bit different to sort of root out market manipulation. But when you have this type of crowdsourcing on social media, it's a lot harder to sort of corral this and find a villain to sort of, you know, pull out and prosecute. It's just not going to happen.
What is it that Ken Mola said? Like, this is someone who's been around, seen lots of market cycles, Taylor, M&A guy, but he's just saying, like, this is something you talk about with friends at a bar. You're having some fun.
They're now the top 5 holdings in the
Yes.
iShares Russell 2000 ETF. That's why we discuss them. They're in the top 5 weightings within the ETF. It is unbelievable.
Carol got really snippy when I implied that she's been around for a while.
I know. I'm feeling
Experience.
I'm feeling a little cranky.
Knowledge.
Thank you so much,
Romane's
Caroline.
going
We
to the
are
timeout
so
box.
glad to have you back here in New York. All right, that's good. That's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same time, same place tomorrow, everyone.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So we're going to be talking inflation. You know it throughout the week, because as we kind of count down to CPI and whether or not that starts to freak people out again. As you said, we're in this lull.
Yeah.
Right?
We are, but at the same time, the Federal Reserve has said, hey, we want to get people back to work. Maximum employment is part of our dual mandate.
Yeah.
And that needs stable prices too, though, right?
And the thing is, the fear is you don't want the economy to fall back because it's harder to get out of that hole, and we know that. Have a good evening.
I'll see you tomorrow.
Tomorrow's Wednesday. All right, let's get a check on world and national news. Over to Nancy Lyons. We go in our D.C. newsroom. Hi, Nance.
Hey, Carol, a new report outlines massive security failures during the January 6th attack on the Capitol. The bipartisan report from 2 Senate committees notes a total failure of leadership by commanders of the Capitol Police. Senator Amy Klobuchar tells CBS this morning she sees as the big takeaway.
For me, it was the lack of planning to have one of the officers, and we picked this up in one of the tapes. He actually said, in the middle of all this, people are being shot, glass is breaking. He said, does anyone have a plan?
Federal intelligence officials are also criticized in the report for failing to adequately warn Capitol Police about a potential for violence on January 6th. The report's recommendations call for better planning, training, and intelligence gathering, but it makes no conclusions about former President Trump's role in the riot. President Biden is heading out of the country tomorrow, and still no infrastructure agreement. Republican Senator Shelley Moore Capito told Politico she spoke with Biden on the phone today for about 5 minutes. White House Press Secretary Jen Psaki addressed the impasse today.
The president has a benefit of 36 years in the Senate, where he has seen that the sausage making is messy. It takes time. There are ups and downs in the roller coaster. We're right in the middle of the sausage making right now.
Psaki says the president has also been speaking with other Republican senators, including Senator Bill Cassidy. The White House is seeking a $1.7 trillion package that includes spending on roads, bridges, education, and home health care. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Broker studio. Charlie Bellett joining me, Bloomberg News. Charlie, this story by our Joe Weisenthal, we know him well. This morning, we got news that there's a record high level of job openings in the United States right now. This is probably no surprise to many people, as we've been inundated with stories about the difficulty that firms are experiencing in terms of hiring.
Indeed, and it's funny because for some reason I jump right to the last paragraph of Joe's story, and it sums up an interesting quirk in terms of the hiring mentality. The more restaurants and other service industries make a point of how aggressively they are trying to hire, the more workers will feel more comfortable leaving a job knowing that other opportunities await them. So as we're hearing more and more about how tough it is to fill these positions, why not ask the boss for a raise at a restaurant industry job? If the answer is no, you know what? There might be another job waiting for you.
We're talking about JOLTS job openings. This used to be a favorite of former Fed Governor Janet Yellen. She watched this number closely. She, of course, now is the Treasury Secretary. But we had U.S. job openings rise in April, as we said, to a fresh record. And if you feel confident enough to quit your job because you know there are plenty of openings out there and there are employers looking to hire you, you as a worker have some leverage.
Indeed, and that's often seen as a bullish sign for the economy. If you can leave for something better, why not leave and get more money in the process? Number of available positions climbing to 9.3 million during the month. Highest data back to 2000, up from an upwardly revised 8.3 million in March. Again, that's according to the Labor Department's Job Openings and Labor Turnover Survey, otherwise known as the JOLTS report.
Yep, workers are quitting too, as we said, according to some government data, quitting at increasing rates. Listen, this is kind of the economy we are in, and we have to all remember in terms of perspective, Charlie, that it fell off a cliff. Never seen that before. And if you look at those numbers in a vacuum or in an isolation booth, you're going to be like, oh my God. And just like the bounce back is shocking. You know, we have to put these all in perspective.
Indeed. The Johnny Paycheck economy. Not going there. Leave it at that.
All right, Charlie, thank you so much. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pollitt. Equities closed within a hair's breadth of a record today. Treasuries rose as investors continued to debate the impact of resurgent inflation on monetary policy. S&P 500 index higher, little change, up less than a point to 42.27, less than 6 points below its May 7th record. The Dow, late day fade, down 30, dropped there just about 0.1%. NASDAQ up 43, up 0.3%. NASDAQ 100 index up 0.1. Russell 2000 up 1.1%. Dow Transports up today by 0.3%. 10-year yield 1.53%. Gold down 0.3%. 1893 West Texas Intermediate crude closing with a 70 handle, 70.22, up today by 1.4%. Meme stocks rallying today. Among the standouts, Wendy's up 25.6%, GameStop up 7%, AMC Entertainment up 0.9%. Heading in the other direction, Lordstown Motors, that's the electric vehicle startup that recently went public, said it might not have the cash to get its debut pickup truck to market. Lordstown shares, ticker RIDE, plunging 16.3%. I'm Charlie Pollitt. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar in our Interactive Broker studio. Shares of Academy Sports and Outdoors, they rose about 5%. This is after the company reported earnings, raising its financial forecast for its fiscal year, including comp sales, net income, despite some ongoing issues tied to COVID-19. Remember, we talked with the head of the company back in October, right after it went public. Let's bring back Ken Hicks. He is Chairman, President, and CEO of Academy Sports and Outdoors. He's with us once again from Katy, Texas. Ken, how are you?
Doing terrific, Carol. How are you today?
Doing well, working our way through as the world reopens, and it feels good. Tell us about you. We talked with you just after the IPO. Your stock's been on a tear this year. It's up more than 85%. Tell us about how it's been since the IPO and what business looks like and the consumer trends that you're seeing.
Yeah, we're obviously seeing some very strong business. We're, reported sales up almost 39% and very strong profits, and we've upped our estimate for the year to between 6 and 9%. What we're seeing is the customer who found the new hobby, found fishing or camping, riding bikes, built their home gym, is coming back and buying more. And so people who got into the outdoors or into a sport are really continuing with that.
Well, that's interesting. And your supply chain, you guys have had no problem meeting everything that you needed to?
Well, no, the supply chain is a challenge.
Yeah.
But we never closed during COVID, and we were able to stay open, and that allowed us to be able to order goods and see what was happening. And so I'd say we're a little bit ahead of some of the others, and our team is just doing a terrific job getting the merchandise through, but it is not easy. And we still have some inventory issues in some areas, but overall, it's at an acceptable level.
Is it getting easier? Are you seeing things, kind of loosen up, lighten up in terms of the supply chain getting more, normal, if I can say?
No. I think we're going to see this through the remainder of the year.
How does that make you change your thinking about how you want your supply chain to work going forward?
Well, we actually have a major study underway right now, and we're going to take some significant actions to improve our supply chain going forward to really make it more flexible and more up to date. It works okay, but we're going to need, as we grow, a much stronger supply chain.
What does that mean, though, Ken? Does that mean more stuff in your backyard to where you're selling? What does it mean? Because I'm assuming most of your sales are, help me out here, remind me, is it mostly North America, U.S.?
All of our sales are U.S. We're in the south central part of the United States. And, the thing, better systems, better processes. We've got the infrastructure in terms of buildings, but what we need now are better processes and systems to be able to track and flow the goods through the system faster and more accurately, and keep a better eye on it.
So it's not necessarily manufacturing, bringing manufacturing back home to the U.S. You just need systems that can track it. I think of always the Apple model, where I could buy a phone and I could tell where it was at every step of the the stages. That's what you're looking to do.
Yeah, Carol, you're right on.
Hey, listen, in the Ken, in the corporate earnings release, you guys noted there, and here's a direct quote: "There is still economic uncertainty from the impact of COVID-19 and other external factors." Is that the supply chain or something else?
I would say just it's the supply chain is part of it, but also, people are still trying to find their way in what they do. In our markets, a lot of people have been out for a while, but how will people spend their money, and how long people will continue with some of the hobbies and habits that they've got. We're seeing that they're continuing, but as people go out to eat more, go on vacations and things, that there's always a risk of how much money they have to spend on other adventures.
Right, the wallet is just so wide, and so you make choices.
Or as most people would say, so thin.
Exactly, especially if you've got a kid in college. Hey, listen, one thing I want to ask you, your stock is nearly 20%, or it is 20% shorted the float as a percentage, of the float. I know CEOs don't like to talk about their stock price, but in the world of meme stocks where high short positions get the attention of the retail Reddit investor crowd, are you a little concerned about getting caught up in that?
Not really, because I think the lift we saw today and we've seen so far is based on the performance that we had, and unlike some of the other stocks that you're referring to, they don't have the underlying foundation of a good solid business. We do. We've got sales growth, we've got profit growth, and we have opportunities for expansion online and in other markets that a lot of other people don't have. So we've got that solid foundation to continue to grow.
Yeah.
And I think that's what will allow us to weather through some of the challenges that other stocks have seen.
Ken, really quickly, 20 seconds, one item that's just flying off the shelves right now.
Tents.
Tents.
People are camping like crazy.
All right.
And so that's good for us.
All right. Good to know. And always good to check in with you. Ken Hicks, he's Chairman, President, and CEO of Academy Sports and Outdoors.
Okay, traders, we need to cancel, we need to cancel order to sell short Bitcoin. As you can see, it takes too long to fill this order and it moved different direction. Let's see what's going to happen tomorrow, because overnight broker will increase spread and increase prices and charges, so it's not much point to hold it and especially to execute this order overnight, because at the end of the day we're paying the overnight charges. We have to pay to broker because we trade on margin. So if you want to buy, please cancel this order, don't hold it overnight, and we will see tomorrow what's going to happen with Bitcoin. Okay, guys, stay safe and I'll speak to you later.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week on this Tuesday. Carol Masser in our Interactive Brokers studio. I mentioned some news out of Amazon earlier. The stock was up a little bit. This has to do with its foray into healthcare drug, selling of drugs, specifically prescription drugs. So we're going to talk about that and just more broadly the Amazon world and how we apply it elsewhere. John Rossman's back with us, founder of Rossman Partners, author of The Amazon Way. A new edition is out. First up, though, back to Charlie Pellet with a check on some of the news after the close. Where shall we begin, Charlie?
Amazon up by 2.1% right now. We've got the Dow lower, S&P, NASDAQ both higher today. Equities closing within a hair's breadth of a record. Treasuries rose as investors continue to debate the impact of resurgent inflation on monetary policy. S&P ended little changed, up less than a point today, 42.27, 6 points shy of a record. The Dow down 30, down 0.1%. NASDAQ up 43, up 0.3%. 10-year yield 1.53%. Gold down 0.3%. West Texas Intermediate crude up 1.2%, closing above $70 a barrel, 70.05 on WTI. The World Bank sees the strongest rebound in 80 years. The bank says emerging market and developing nations will continue to struggle with the COVID-19 pandemic and its aftermath, even as a few major economies spur the strongest post-recession global growth in 80 years. David Malpass is the bank's president. He spoke today with Bloomberg Television and Radio.
The negative side of it is that the developing countries had an even deeper recession and a slower recovery, so that they're left further behind in terms of per capita GDP.
Cassava Sciences, a drug maker with no products on the market after 20 years, is the top biotech performer in 2021 with an increase this year of 911%. Behind this meteoric rise is a combination of optimism for its early-stage Alzheimer's drug and the frenzy of retail day trading that has characterized the pandemic. The company is the third biggest gainer this year behind GameStop and AMC Entertainment Holdings in the Russell 2000. Cassava up today by 2%. AMC shares did advance today. We saw AMC a little changed up at 0.1%. GameStop up 7.1%. Among some of the other mean names, we had Wendy's up 25.6%. Byron Ween says U.S. stocks will break out of a 2-month slumber and resume their record-breaking rally as the economy recovers and inflation stays in check. Ween is the vice chairman of Blackstone Group's private wealth solutions business. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. So Amazon shares are higher today. We mentioned that, and Charlie just talked about it as well. The company offering 6-month prescriptions starting at about $6 for medications for common ailments. The company's latest effort to entice more people to buy things online rather than at a pharmacy or supermarket. I mean, Amazon, like them or not, they have definitely transformed the retail world in a big way. And someone who understands this company so well is John Rossman. He's former Amazon executive, founder of the advisory firm Rossman Partners. His book, he's been on before, we've talked about it, Think Like Amazon, 50.5 Ideas to Become a Digital Leader. And the third edition of the book is just out. And actually, the Amazon Way is just out. Amazon's 14 leadership principles, and that is in the third edition. Forgive me, I mixed them up. John, good to have you here. You joined us on the phone from Seattle. We've been talking about the Amazon news a little bit. I mean, Amazon continues to spread its tentacles, and it really is looking to cement its position when it comes to healthcare. Talk to us a little bit about that.
Hi, Carol. Thanks for having me. Well, I hope that Amazon and other companies are able to improve healthcare across the entire value stream. It's 18% of GDP, as Warren Buffett says. It's a tapeworm on our economy. And so I think it's just really interesting that Amazon continues to expand in value streams to pursue big businesses and to help customers out. And I think this is just another step in the direction of linking together healthcare, customers, and everything else that Amazon does, like grocery stores that can become pharmacies, home delivery, all of these components together.
You've written about Amazon, as I mentioned, and forgive me, I was a little messed up coming in, but it's Think Like Amazon. You've got the Amazon way. You write about them. The more you think about this company and you look at the world and how it continues to evolve, and John, even how it evolved over the last year because of the pandemic, how does your experience at Amazon just kind of cement how you think about how Jeff Bezos and team, positioned themselves and kind of grew that company and their approach to how they looked at things?
Well, that's really the story I've been trying to capture over the years, because I think they are the most interesting company in the digital era. And it's because of why and how they go about their work, not so much what they do at the end of the day. And they're extremely consistent in how they think about problems, how they hold each other accountable, what they put as priorities, how they think about long-term nature of investments. And those are really the leadership principles of Amazon. And that's why I think it's a nice, quick read. And everything I talk about in the Amazon way, it's not about Amazon. It's about what other leaders and other companies can learn from a company like Amazon to apply into their own strategies.
And what's interesting, too, is I should say that our own Brad Stone, who wrote the Everything Store on Amazon Unbound, says, you just talk about the company's kind of secretive corporate culture. I don't know that we know that much about it, and just show how Jeff Bezos, of course, these unique systems that create and bring about and foster good decision making at all levels of the company. If there was one nut to kind of point to, what would that be?
Well, unfortunately, I don't think there is one nut, but the one nut is really their leadership principles, because the leadership principles are really how they go about. And I would say what's secretive about Amazon might be the things they are working on, but how they go about it is actually very public and very transparent. And that's the story that I capture here, is like, it's what you do and how you go about it and how you think together as a team and how you hold each other accountable. Those are the inputs that you have to focus on in order to get the outputs you want, which is innovation and growth.
Hey, just got about 30, 40 seconds, and then we're going to come back and talk some more. But, many companies and many leaders talk about building teamwork and, team think, if you will. What's different, though, about the team approach at Amazon? And just, again, about 30 seconds, and then we'll come back.
Yeah, I think one thing is about how they try to avoid bureaucracy and how they empower teams and leaders of teams with ownership of core capabilities, and then the right level of decision-making rights around those core capabilities, and then these clear guidelines that say you are empowered, you are expected to make fast decisions, you're expected to make the right decisions. And I think that nature of trying to avoid becoming a bureaucracy and realizing that speed matters in business, and so many decisions don't need to be brought to the center and made these big decisions.
Right, and it makes people a lot more nimble in terms of getting things done. Hey, John, sit tight for a second. John Rossman, former director at Amazon.com. His book out in third edition is The Amazon Way, and of course, he's also written Think Like Amazon. We're going to continue the conversation in just a moment. Let's get back to World and National News. Nancy Lyons in our D.C. studio. Hey, Nance.
Thanks, Carol. Colonial Pipeline CEO Joseph Blount says he's deeply sorry for the paralyzing impact a recent ransomware attack had on the flow of gasoline along the East Coast. He testified today before the Senate Homeland Security Committee.
Blount said how a minor part of his computer system was breached is still under investigation, and as to his decision to pay the ransom,
The decision was solely ours as a private company. Considering the consequences of potentially not bringing the pipeline back on as quickly as I possibly could, I chose the option to make the ransom payment in order to get all the tools necessary to bring the pipeline on as quick as we possibly could, safely as well as securely.
Blount said the encryption key the hackers provided worked, but only partially, and his financial system, for example, has only now been restored. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration is creating a supply chain disruptions task force to promote economic security. Council of Economic Advisors member Jared Bernstein tells Bloomberg Key in that plan is a $50 billion investment in semiconductors.
This is a deep and consequential magnitude of an investment in producing semiconductors and subsidizing the building of semiconductor plants.
Bernstein says the pandemic revealed structural weaknesses in the country's supply chains. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar in our Interactive Brokers studio. Do want to mention a headline just crossing the Bloomberg. President Biden looks like they are ending infrastructure talks with no deal. And so that's the official statement. And we know this is something certainly that the president has been working on, but again, looks like they're ending some of the talks right now with a no deal at this point. So Charlie Pellet joining me as well. Charlie, you know, the back and forth of some of these negotiations, and we'll see if there's any movement.
A developing story. Obviously, we have more details, but the talks involving Republican Senator Shelley Moore Capito, those talks stalling, and Capito, by the way, leading the discussions for Republicans. And no doubt a topic we will be hearing a lot more about tonight on our political program, Sound On, which you can hear right here on Bloomberg Radio.
All right, great. Thank you for filling that in. Hey, one story we wanted to bring to everybody's attention. It's the most read story on the Bloomberg in the past 60 minutes, and it has to do with Lordstown Motors. Shares plunging today, 16% after the electric vehicle startup and an amended 10K filing said it needs more capital to complete the development of its EVs, get regulatory approval, begin commercial scale production, and start sales. It's never just a straight line forward.
Indeed, and often, you know, in the back of my mind, I'm thinking about what sort of a Harvard Business School study will this make down the road? What sort of a movie might this make down the road? But as you say, it's an EV startup that may not last. The disclosure coming in a regulatory filing. CEO Steve Burns said during the company's first quarter earnings call last month that his company needed to raise more money to fund the endurance truck model's development. Also, too, on top of this, we had that SEC probe back a couple of months ago.
Yeah, and we actually had the company coming and saying in that filing, our current level of cash and cash equivalents not sufficient to fund commercial scale production and the launch of sale of such vehicles. These conditions raise substantial doubt regarding our ability to continue as a going concern. Those are tough words. Stock is down 44% so far this year. Market cap just below $2 billion. All right, Charlie, thanks for that. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
According to a White House official, the Biden administration is shifting away from infrastructure talks with Republican lawmakers to talks with a bipartisan group. The official says Biden does believe GOP Senator Shelley Moore Capito operated in good faith throughout their discussions. We'll have more on the story, developing story tonight. We will have more coming up on Sound On right here on Bloomberg Radio. Turned out to be a mixed Tuesday here. The Dow lower late day fade dropping 30 points, down 0.1%. S&P eking out a gain, just about 5-6 points away from a record up today by less than a point, ending of the Tuesday session at 42.27. We've got NASDAQ up 43, up 0.3%. The NASDAQ 100 index, Russell 2000, Dow Transport also advancing today. 10-year yield 1.53%. Gold down 0.3%, 1893 a barrel, an ounce on gold. Speaking of barrels, significant threshold, psychological threshold for crude today, $70.04 a barrel, closing above $70 a barrel. WTI up by 1.2%. I'm Charlie Pellet. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. Let's get back to John Rossman. He's former Amazon executive director of Amazon.com, founder of the advisory firm Rossman Partners. And his book, of course, we mentioned it, is The Amazon Way. He's also written Think Like Amazon. The third edition, though, of The Amazon Way just out. And he's still with us on the phone from Seattle, Washington. Hey, John, it's a third edition. What's new with this book?
Yeah, there's a lot of things that are new. First, Tom Alberg, who was on the board of Amazon for 23 years, wrote kind of his feeling about the Amazon principles. I wrote a new preface, which is a recommendation to Amazon for a 15th leadership principle that I think would help them for the next 25 years. And then I'm always checking in with current Amazon employees on, like, what do the leadership principles mean to you? How are they manifested in the work? So I just updated it with a number of new ideas and feedback from current Amazon employees, all to help others understand so that they can think about them for their own organization.
Well, and talk to that a little bit about, so these are leadership principles. There has been, as you know, some criticism, that sometimes from Amazon workers about unions or lack thereof or how they're treated. What's the leadership relationship with workers, I guess, is what I want to ask you. And how does Amazon really think about their team? Because if you think about it, Amazon has, they've got folks delivering, they've got folks all over the world really interacting with consumers on a daily basis, and they're crucial to the success of this company.
Yeah, they absolutely are. And those are tough jobs, right? And so it's difficult to strike that right balance. And Jeff's latest shareholder letter, his last one that he'll write as CEO of the organization, he talks about it head on. And he talks about that we need a new vision and we need to become the Earth's best employer and the Earth's safest place to work. And so they know they have work to do there. So I think that Amazon has never evaluated themselves as a benchmark against other companies, because I think as a benchmark they do extremely well on these matters, but they want to do better, and I think that will really push them to do what they do so well, which is to innovate solutions to these types of problems.
What do you think the Amazon of the future is? Because who would have thunk, right? You think about, this, how Amazon started as a company and how it has evolved. And we were talking earlier, we were talking about the outages at some well-known websites, including Bloomberg, New York Times, and how we're now learning about CDNs and understanding, the content delivery network and how things work. I remember the story years ago when all of a sudden it was like if you were streaming, I don't know what the series was last night, you were probably doing it on Amazon Web Services, and all of a sudden we looked at Amazon as a very different company. So what is the Amazon of tomorrow?
I think you still see all the major components that they are manifesting in their business today, but I think they just continue to get amplified and they become the infrastructure for all commerce that's going on. So whether it's computing or media or retail or payments, customer information, healthcare, I think that they just continue becoming embedded across all of these different industries and into our lives in new ways.
So in terms of leadership, does that strategy that they have in place today, John, continue to carry them going forward? And are they laying kind of the foundation today for what they plan to do in 5 to 10 years from now?
Hard to know if they really have a plan for 5 to 10 years. I think that they continue to be led by just exploration, right? Exploration of bad customer experiences where there's friction in the supply chain, where there's excess cost, and where their form of invention, which is essentially removing friction, making it easier to get something done, adds to the value equation. And so I think they will continue to leave themselves open to exploring new businesses where they find bad customer experiences.
Do you have a fun anecdote of working with Jeff from your days there?
Yeah,
I'm sure you have many.
I opened up the book with a great experience where Jeff was asking me about where we were on launching the marketplace, and I started to answer the question. And what he got on me about was, although your job is director of merchant integration, I want you to act much bigger than your job and ignore the organizational boundaries, ignore these things that don't matter to customers or to getting things done. And so those are just the golden moments where you see these leadership principles and the ethos of do what's right for the customer, do what's right for the business, don't worry about all this internal stuff. That's where you see it come to life.
But it's such a different, you know this, John, it's such a different management style, right? Because if you think of years ago, and I'm sure there's still a lot of companies out there where it's like you have to work within your vertical or work within your world. And we know that that's increasingly, you can't do that. I know the analyst world, but you think of a company like Tesla, are they a car company, are they a battery company, are they a solar company? Like you have to think kind of out of the box when you're looking at a lot of things. And I'm just wondering, do a lot of companies, are they still stuck kind of in an old framework that keeps workers or leaders, kind of with barriers?
They are, and I think the biggest place that they're stuck is they need to understand that you need to be both a world-class operator as an organization and you need to be a systematic innovator. You can't be just one. Many are struggling with just being one of those two. You have to be both. You have to be both a world-class operator and a systematic innovator, or your risks skyrocket.
Automation versus workers. What's most important? Did I lose John? Oh, did we lose John? Oh, there we go. Automation versus workers, John. Because you guys, you talk about automation in your book and the importance of it, how it makes workflows simpler. And I keep talking with various CEOs and leaders. We learned it a little bit during the pandemic. What's the relationship going forward of automation versus human workers? And just got about 40 seconds.
Yeah, I think it's just the balance between trying to find efficiency and speed for, getting the job done, as well as, creating great jobs. And I think it's just going to continue to be this refinement of helping machines and robots and automation do what they do extremely well and augmenting those into the jobs that people do and trying to make them both safer and more efficient at that. And so I think it's just an ongoing evolution of capability that's going to go on. I don't think these jobs ever go away, but they won't stay the same.
All right. Well, there's a lot of great stuff in this book. And, it's interesting to talk about Amazon because it is a company that has continued to evolve and certainly impact the broader world, that's for sure. John, thank you so much. John Rossman, he's founder of Rossman Partners, joining us on the phone from Seattle. Check out The Amazon Way in its 3rd edition. All right, that's going to do it for this edition of Bloomberg Business Week. As you know, markets, not really any big changes. The NASDAQ, though, the outperformer, up about 0.3%. You are listening to Bloomberg Business Week. Carol Massar for the whole Bloomberg Business Week team. Have a safe evening.